Hi, welcome all. My name is Deepesh Mehta, and we are having a very short webinar today on tax-free investing in India for NRIs. We understand that all the participants would be, having different time zones. So we'll also be recording this and also be uploading this on our YouTube. So with this, let us get started off with this. So yeah. So you as an NRI, you know, are you worried about starting small investments in India just with US dollar 500 to try different markets? Are you worried about high taxes and complicated processes that were existing before, but want to join India's growth story and want to invest from a bank account of your country where you reside? So as an NRI, there's always a skepticism that I can't invest bulk money because some of the other tax-free products are actually tax-free, but you have to invest about $1.5 lakh in a year. But you might not be comfortable putting so much of money. So you want to start small. And you're also worried about high taxes and complicated processes that is there in India. But you also wanted to make sure that you wanted to enjoy the growth story of India, and you want to invest from the bank account where you reside and not necessarily want to have an NRI account in India. Okay, so the problem as an NRI that you faced in the past was these. Okay, so too much of paperwork where there. Investing means getting an Indian PAN card, Aadhaar card, and an Indian bank account. This was impossible for many NRIs because they were not able to get an PAN card, Aadhaar card. There are also capital gains on in existing investments at 10-15% dividend tax at 10%, and some returns were taxed both in India and abroad. So this was the rule that was there in the past. And there's no opportunity for any product to some foreign nationals. So these were some of the problems which NRI typically faced, and also they were having dollar to rupee depreciation issues as well, and that actually kept NRIs from putting a bulk of money in India. So what is the solution today? The solution today is GIFT City. So I'll tell you what is GIFT City. GIFT stands for Gujarat International Financial Tec-City. That is the concept of a GIFT City. And I'll tell you how did this get evolved. Around the world, places like Bahamas, Cayman Islands, and Bermuda attracted billions of rupees with tax-friendly rules. So you must have heard some countries, some jurisdictions like a Mauritius fund or a Cayman Island or a Bahamas fund. So these are all small islands. Probably small, these islands are not bigger than Bangalore or New Delhi, and they attracted billions of dollars into their country. And this is what most of the people were going there and investing. The Indian government realized that if more NRIs are putting money there, why not have a simple and same concept in India as well? Thus, GIFT City was actually created. And GIFT City is a small place which is between Ahmedabad to Gandhinagar. There's an area of about 30 kilometers. In this area was called as GIFT City in India. Okay. And although it is located in India, it is treated as a neutral territory for global finance. That means if any transaction happens through GIFT City, it is called as a foreign place and it is not treated as a local Indian place, though it is geographically located within the boundaries of India. It gives NRIs plus other foreign nationals a safe, regulated, and tax-free way to invest without the old restrictions. That is the importance of GIFT City. Okay. So that is how GIFT City came into existence. Now, I wanted to focus on these things. Previously, only two options were available in GIFT City. One was called as Venture Capital Fund, where the minimum investment dollar was about $2.5 lakh, which was approximately 2 crore INR. So that actually kept a lot of foreign nationals and institutions away. And it said that the maximum scheme where the maximum number of investors in one scheme was about 50 or about 50 investors. So these were called as these were launched by fund management entities. Then there were some wholesale schemes which had some restrictions, and these were also called as AIF, and then the minimum investment of about 150,000 US dollars, which was around close to 1.25 crore rupees approximately, and the maximum investor per scheme was about were about 1,000 people. These two schemes could invest money in money market instruments, unlisted securities, units of mutual funds, investments in LLPs, they were allowed to make an investment. Because of the higher cap of either $2.5 lakh or $1.5 lakh, kept lot of investors away from not investing. Because as an investor, as an NRI, if you have to make an investment in India, and if you had, let's say, if you want to invest it in some these products, like, then your minimum net worth should have been about close to 10 crore rupees, or at least $1 million. Then only you could write and check to this, else you will have some concentration risk. The government realized this issue, and then in budget 2024 they also notified this and made a small amendment in this gift city. They introduced something called as retail schemes, and then these are called as registered fund management entities for retails. What this option gives is that it allows all investors, include retail investors, to invest, and the minimum investment starts with $500 only. So think that if you are an NRI residing in Dubai and you want to make an investment in India, into this gift city, all that you have to put is about $500, which is about close to 45,000 INR. And the minimum criteria is about, for that fund, is about 20 investors. So which means if there are 20 investors, which I believe will always be more than 20 because of the kind of ticket size that's there, it's permissible. Hence, this is the webinar that we are going to talk today, that the retail schemes under the gift city, which will give an option for an NRI investor to invest in India as small as $500, and the returns will be tax free. And that's the most interesting thing here. Okay. Taxation advantage. What taxation advantage that you will have in the gift city is that gift city offers a tax friendly environment, attracting investors to optimize their portfolios. The key benefit include, and not all the products under a gift city are taxable. I am referring to the options that is available for you, this specific retail gift city product, which will not have any dividend distribution tax, which will not have any capital gain tax on securities. It will have ease of remittance and repatriation of funds. No need to file taxes in India. This is what you are going to get when you are going to invest in this. So these are the tax. One thing you have to remember, that these are the tax implications as per the Indian tax laws, but investors are subject to pay capital gain tax as per his own country of residence, where she is a registered taxpayer. What I mean by this is that, let's say, I'll give you two examples. Let's say you are an NRI from a Gulf country, and then you invest in India in gift city into this product that I'm referring, and then this investment will be tax free for you. So there is no TDS that is going to get deducted. You take this money back to Gulf, and then this is also tax free country in your case, because it doesn't tax us on capital gain taxes. Okay, but if you are from a country where there isn't tax, let's say, for example, take the example of UK. So if from UK you make your investment to India, you will make an investment, and when you repatriate back, there is no tax, so there is zero TDS on your investment. You take this money back to UK, but in UK you will have to pay capital gain tax in UK. So what I mean here is that Indian government will not levy any tax under the gift city, under the product that we are actually talking about. But the investor is subject to the tax laws as per the jurisdiction where he is residing as his country of residence, where he is a registered taxpayer. So if you come from, as an NRI, if you come from a country which doesn't, for example, Singapore, the Gulf countries like Abu Dhabi, the whole of UAE, Kuwait, Oman, and other countries, then you will not have any taxes. But if you come from some other jurisdictions, then there's going to be tax in your countries on the gains that you make in India. Okay. How does this work is that, let's say, as an investor, you transfer this money to in this product in gift city in India. So you either has to be an NRI, person of Indian origin, or a foreign citizen. So not only NRI, even foreign citizens can invest in India through this gift city. You remit this money to fund in gift city. This fund in gift city will invest in securities like mutual funds through the master fund. Okay, so you are going to transfer this money to this fund. This fund will buy different units of different mutual fund schemes. They generate tax returns, and this is passed on back to you as investors. This is how the closed-ended structure loop will look like for you. I repeat this once again. You invest your money, remit your money to SWIFT account, and then this fund goes and buys different stocks. It generates returns. you want this money, it is again given tax-free back to you as an because you are an NRI or a foreign citizen or a person of Indian origin who is not residing in India. How can Happy Investor help you is that, we are a trusted partner. We have a deep understanding of this Gift City, offer comprehensive investment solution. We have been tracking this Gift City. Our service includes expert guidance, streamlined onboarding, diversified product offering, product optimization, tax optimization. I suggest that you leverage India's strong economic growth and demographic dividend by investing through Gift City. By let Happiness to be your partner in unlocking the potential of thriving financial hub. This is catching up. In the last 3 years, Gift City has taken investments to leaps and bounds. Why invest now? You enjoy returns in India which have high potential. Your returns are protected from extra taxes in India. You invest with ease from your home country, whichever country you reside, except from some FATF countries, which are financial action tax for which these residents from these countries like Pakistan, countries like Bangladesh, countries like Nigeria. Some 15 countries are banned. Apart from this, if you reside in any part of the globe, you can make your investments. You have a trusted partner managing your investments, and you start with a small ticket size of 500 to explore and then scale it up. This is why you will have to invest. And if you wait, you will miss the chance of becoming a part of India's growth story. You continue facing tax and other compliance hurdles in other parts, because if you miss out Gift City, then elsewhere you will have a lot of compliance issues. Your money may earn less in other countries. India is a developing country, so it has more opportunities to give returns. You lose the benefit of starting early. You lose the benefit of compounding. What is your transformation going to be is that, before you had limited access, high taxes, complicated process. Now you have easy access, tax friendly place. That's a Gift City. Stress free investing, because we manage everything for you. You feel from you move from that feeling left out to being a part of India's growth story. So India's growth story, why invest now? Again, I say India is one of the fastest growing major economies in the world, expected to become the third largest economy by 2028. Today it is fourth. Over 65% of the population is under 35, a young, energetic workforce. Digital revolution, you see Aadhaar, UPI, and other things. There's a lot of digital revolutions happening in India. World leader in real-time digital payments. Urbanization and infrastructure boom is happening. New cities, new metros, new highways are coming up. Stable and resilient economy even during global slowdown. Just as I explained this to you yesterday, there was a news that S&P, the global rating agency, rated India one notch above from triple B, triple B minus to it made to triple B, so which is one level above this. So we have got an improvement in our ratings. Strong stock market performance, beating many global indices. If you look Indian stock market returns over the last 10 years, it has beaten most of the global economies. Some FAQs I'll have about investing in Gift Cities. I'll cover this. How to get started. So step one is you tell your investment goal. We'll choose a Gift City investment option. You share simple documents from your home country, like your passport, your tax ID, not India, but that other particular country. You send directly, so you send money directly in US dollars or any other currencies. It gets converted to INR. We manage, rebalance and exit, reshuffle, whatever we have to do as per our job, part of our job will do. You redeem and you enjoy tax returns as per Indian laws of the Gift City. Do you need to be physically present in India to invest in Gift City? The answer is no. You don't need to be physically present in India to invest in Gift City. You can remotely invest through various online channels. You can remit the funds. All the forms can be signed, and then you can send a scanned copy. That is what the Gift City says, that you don't need to be physically present in India, and neither you have to courier any of the forms. From which bank account can I do my transaction to Gift City? You can typically either use your NRI account if you have one, or any international bank account to make any transaction related to your Gift City. For example, you are in Abu Dhabi. You want to invest from Abu Dhabi Commercial Bank to India. You want to invest from HSBC of UK to India. From wherever you have balances in whatever currencies that you have, you can remit money to India. The fund will actually transfer that to INR and then make the investment in India. However, it is advisable to consult your bank to confirm the specific requirements and any potential restrictions. If you have any specific potential restriction, please confirm that. But otherwise, from any bank account, you can transfer. Can I invest jointly in Gift City? The answer is yes, you can invest jointly in Gift City. None of them should be a resident Indian. So husband and wife, husband or two people, both of them has to be NRI. None of them has to be resident Indian. Then what are the documents required? The documents required is your country's respective documents should be sufficient, like your local address proof, which could be utility bill, a TIN number, like a PAN you have in India, you have a tax identification number in your respective country, we need it. No Indian PAN, I repeat again, no Indian PAN, Aadhaar or bank account is needed. Who cannot invest? More importantly, a resident Indian cannot invest. So this product is not for resident Indians. It is so you cannot invest. If from nations like blacklisted and grey listed list of FATF, NRI and foreign investors from US and Canada cannot invest. So basically, it has just started, but US and Canada have some specific additional restrictions. So the fund is not yet equipped to accept money from US and Canada, but this is not a permanent thing. In a matter of 2-4 months, we will also be having some funds which will accept money only from USA and some funds which will accept money from Canada. So the option is always there. It is not a dead end here. You will always have the opportunity. Another question that I have that, let's say you are an NRI today and a few years later you become a resident India. What happens? At that point of time, the moment you become a resident Indian, you will have to then convert your KYC from non-resident to resident Indian. At that point of time, the fund will redeem all the whatever is the balance there and credit it to your bank account back, because once you become a resident Indian, you cannot invest. Why should you choose us? Happy Investor manages about 600 crores of assets for the last 18 years. We started off in 2007. So this is the assets that we manage. We have 650 plus families. About 20% of our clients are NRIs. They trust us, and we have weathered the downs of 2008, 2025 to deliver good customer delight. We have 82. Our team together have 82 years of work experience, and all the team members are adequately certified for this. So there are about only 2,700 CFPs in India. I'm one among them. CFP is the highest level of professional endorsement offered by Financial Planning Standard Board and carries an international recognition. That's it. This is from our end, and we wanted to keep it short. So just to summarize things here. So if you are an NRI, wish to invest in India, and if you're an NRI, wish to invest in India, so there's an option where you can start as small as $500. This money you can invest from any bank account across the globe that you have, and you don't need to have an Indian Aadhaar, Indian PAN card as an KYC proof. You transfer from any bank account to Gift City. Gift City will generate returns, and this returns is you can take this back tax free from India. But definitely you will have to look at your own tax calculation from the resident from where you bring the money. As simple as that. Which company is offering this product? So this was notified in 2024 budget. So all the mutual fund companies are filing the products with the Gift City regulator. Currently, Tata Mutual Fund have started with $500 product. DSP Mutual Fund have started with $5,000. So there are some funds which will take at $500, some funds at $1,000, some funds at $5,000, but definitely not more than $5,000. So our suggestion to you is that let's build a portfolio of 7 to 8 different mutual fund schemes, and those mutual fund schemes will definitely be tax free for you in India, where otherwise at a mutual fund level you pay 12.5% of TDS in India for equity mutual funds. That's it. Thank you from my end, and happy to have any questions from your end. So please let us know if you have any questions. Yeah, I think there's one question in the chat. So the question from Ali is that how will my investment be treated if I am no longer an NRI? So I told you that if you're not an NRI, then the day when you actually declare yourself as a resident Indian, that the fund will redeem all this money and transfer it to the bank account which you have given. What is the total expense ratio? The total expense ratio will be almost 1.5, 1.6% that what you pay in mutual funds. So currently it is not known, but all these funds will be launched in the next 10-15 days. So we'll get to know the total expense ratio 1 month after the fund is launched, when the fact sheet is published. But the range I have mentioned you. Can I invest in Singapore dollars? When the investment liquidated, will it be converted to Singapore prevailing rate? Yes, this is very important for you to understand. When I say Gift City and you can invest in any currency, what does this mean is that, let's say if you're in Singapore, the money will definitely get converted from Singapore to INR, because Indian Gift City will not, you can't make an investment without converting to INR. It has to get converted, and the returns will and the returns will also have the currency risk of dollar to rupee depreciation that will always be there. It cannot be eliminated. So that is there. And when you invest, it will be when you invest, the conversion will happen at the prevailing rate of the purchase, and when you redeem, the conversion will happen at the prevailing rate of the sale. Fourth answer, are there any investment option to invest in unlisted stock at no, currently, though options, though the mandate can be there that these funds can buy in unlisted stocks, but currently the offerings are only for listed stocks and not at unlisted stocks. Rekha Venkat Krishnan is asking, are the returns same as any other mutual funds? So Rekha, each mutual fund will, the concept is mutual fund, but the returns will be same. Two mutual funds returns cannot be same. So it all depends on how the fund will actually manage the returns and give the returns to the investor. So if your past returns has been good, and if you're asking that will my return continue, it all depends on who the fund manager is, what is the investment objective of that fund. But more or less, because it's a structure of a mutual fund, I would like to tell that it will be more regulated. Guardrails will be put in place. There's not going to be any major blow off that will happen in the portfolio because SEBI and the GIFT regulator has put certain guardrails, and more or less it will be in line with how you are investing in India through your normal mutual fund route. Other question that I would like to other point that I would like to tell is that should I redeem my existing mutual fund and then put all my money here because it is tax free? My answer to this is no, not at this moment, because this is just a new concept. So we are not recommending that you should sell all your mutual funds in India which are suffering a 12.5% tax and then invest here. My advice to you would be is that please go ahead and invest a little bit of money. We'll see in 1 or 2 years, and in case if these returns are also in line with the other regular mutual funds that you invest, then probably you could take a call in adding more to the portfolio. That's it from my end. And any other questions, please unmute yourself and ask. I'll be happy to take up those questions for you. So I guess I'll just wait for a minute, and if not, then we will close the call. If there's any question, please feel free to ask. At Happy Investor, we are always at the forefront to understand what are the new products that are actually coming in the market, and we bring this to you, all of you, and make sure that you have the first mover advantage while investing in these products. Okay, then I think we are done, and thank you so much. Thank you for joining by, and see you soon in a different webinar next time. Thank you so much.